What's up, my oh so beautiful people? Today we're going to be talking about real estate versus REITs and what you may consider or want to invest in, especially during a time like this. And please make sure you stay all the way until the end because I'm going to give you a bonus. And not only a bonus, but I'm going to really get into detail about one specific topic. When comparing real estate versus REITs, I want to break down what I mean by real estate. So in this video, what I mean by real estate is physical, tangible property, like rental property. And REITs are REITs. REITs are real estate investment trusts. Which you can invest in a fund owned by a corporation that's publicly traded, and you can invest in homes, hospitals, malls, office buildings, etc., just all in one big fund. So that's what I mean by that. Again, real estate is going to be physical property like rental income, and then REITs is going to be what REITs are, which is a fund, a corporation that holds a ton of real estate. Some of you may watch people like Meet Kevin and Grant Stephan and be like, well, they're multi-millionaires and they buy and hold real estate and they made their millions off of real estate. That may be true. I mean, I can't speak on that because even though they make videos about their portfolio, you see that most of it comes from YouTube. I'm doing YouTube right now, so hopefully I could get like them one day. But some people that I will advise you look into when it comes to investing in real estate, as in buying real estate and selling it and leveling up in your real estate portfolio, is Flip Anything USA and Ben Mala. Their links are in the description below, but these guys have been in real estate for decades. I know I'm making them sound ancient, but they've been in the real estate game for years and years, and they actually buy and sell properties and make profits off them and then level up or, move around their investments. When it comes to Meet Kevin and Graham Stephan, they really have the buy and hold method, so they're not really making any profit. They like to talk about, equity in the home. I just wanted to point that out as we talk about, real estate and REITs. That there's different kind of people that invest in two different things. And then if you look at Andre, here's his profile here, you'll see that he invests a lot in REITs because, like he said, he don't want to deal with the headaches and he don't want to deal with managing a property and owning debt, etc. Okay, let's jump right into it. And first we're going to talk about time to invest, right? Like how much time does it take to invest in REITs and how much time does it take to invest in real estate? Now with REITs, it's simply a click of a button. Once you fund your brokerage account and you do your research, which you should do research on all investments, you are going to find a REIT that you like and whatever return it has, and you're just going to fund your brokerage account and click a button and you're in it, right? With real estate, physical property, you have to go through inspections, you have to get a real estate agent, a broker, build up the down payment, you have to make sure your credit score is right, etc. These things could take up to months just to close on one investment deal. So REITs is going to have the advantage here when it comes to time to invest. You can just simply find a REIT and press a button on your app or wherever you're on your PC. With real estate, it's going to take a lot more time to invest. Next, let's talk about capital. With REITs, you can get started with as low as $100. When it comes to real estate properties, when you're an investor, you have to put down 20%. I mean, that's very common known, 20%. You may have other people saying, oh, I can find or teach you a way how to just put down 10%, 5%. But when you are an investor, not a first-time home buyer, and you can utilize FHA loans, when you are an investor, a lot of banks would like to see 20% down on that investment just to protect them and to make sure that you can afford to actually buy this asset and can afford, to keep up with the property. So with REITs, you can invest with a little bit of money, like let's just say $100. When it comes to real estate, you're going to need a bit of a cushion there, a few months of capital, depending on how much you guys save. And that's not even including the inspections. That's not even including some of the things you have to do in order to get, all the information for the property. So REITs, again, is going to take this one as it pertains to capital to get started in these investments. Okay, so staying on the theme of money here before we get into like physical aspects of owning these investments, we're going to talk about liquidity. With liquidity, when it comes to REITs, you could just simply cash out and cash into an investment, right? If you see a REIT that you like, you could put money into it. When you get your earnings, or if it goes up or down, you just simply cash out and sell your portion of the REIT, or sell your stock, or sell, whatever you have in the REIT. When it comes to real estate, you actually have to go through the process, the whole process of selling your home, right? Finding a buyer, marketing to put it on the market. It's going to take a couple months for you to, sell that property. Now, in some instances, properties move really quickly, but it's still going to take a couple weeks just to get the paperwork in order, inspections, et cetera, that the buyer may need from you. And then you have to pay, your real estate agent for listing it, again, marketing costs and other things like that when selling a property. So when it comes to liquidity, REITs is going to take that again, because it's going to be a lot quicker to jump in and out of markets rather than having a physical whole investment property where you have to go through multiple steps in order to sell, and that's if somebody's willing to buy it. All right, next we're going to be talking about taxes. So when it comes to taxes, when you have a real estate property, you can take so much advantage of tax benefits and tax write-offs. For example, you can write off your mortgage. You can write off your mortgage insurance. You can write off your property tax. You can write off repairs. You can write off maintenance. You can write off property management team because you hired them to manage a property. So that is an expense to the property, to your business, to your real estate. So you can write that off as well. There are many tax depreciation over the amount of years that you have it. You could just slowly depreciate money over time. And then with the REITs, you really don't have that many tax advantages. So you're gonna just, pay capital gains if you profit. But other than that, if it's not in a IRA, which is a whole nother thing, but if you have a REIT, you really don't have no tax advantages. But when you have real estate, you have a whole list that we just went over of real estate tax advantages and tax write-offs that you can take advantage of. All right, now let's talk about management here. When it comes to REITs, you have no control. You have no control over the management. You're just investing in a company who manages everything for you. You just know what's in the account. But let's say, recently, a lot of people have lost their jobs. A lot of people and a lot of businesses have let go of their commercial property. You can't tell them how to control that portfolio. You just have to sit back and watch it happen. As it pertains to investing in real estate, management, you have full control of that. You can see what's going on in your property. You can know which renter is going to be in there. You can approve the renter. You can hire a property management team who will manage the property for you based on your criteria, how you want the property managed, right? So you still have some level of control of the management of the property. And you can also, figure out if you want to upgrade the property or not, if you want to add certain features or change the colors to the property. And you have a lot more control when it comes to a real estate property or a real estate investment rather than a REIT. A REIT, you have no control over it. You don't manage it. You're just sitting there and hoping that they make the best investments with you and the investors in mind. If you're somebody who wants to avoid debt and you don't have that much money to invest, you don't have that much capital to start off, but you really want to get into the markets, I would suggest you may want to go towards REITs. Like if you don't like being in debt, you don't want to be bothered by managing a property and making sure the tenant is okay and the property management team isn't scamming you and et cetera, et cetera. REITs is going to be for you. REITs is going to give you the most flexibility when it comes to investing in real estate. If you want to be in control of your investment, if you want cash flow, if you want a tangible physical asset, especially in the times we're living in today where the currency is really devaluing, you might want to think about investing into a real estate actual rental property, because you're going to be able to see and feel and work on and invest and really work towards increasing the value of that property, and you're going to have a lot more control over your investments. Thank you for watching this video all the way through, and as promised, I'm going to leave you with a bonus, and the bonus is going to be leverage. When you're investing in real estate, you get to take advantage of leverage. Your money, your initial investment could go a long way. And I'm going to briefly show you what a $100,000 leverage investment in real estate looks like. So we're going to head over to the whiteboard. Okay, sorry I had to change up the lighting here. I just wanted you to really see the whiteboard. So we have $100,000, okay? And we are going to invest that into 5 properties. Each of these properties are $100,000. So you put 20% down on each one. That's going to be $20K, okay? So we start off with $100,000. We find five properties that are worth $100,000, and we put 20% down on them, which is going to equal $20K. Okay, so let's say that rents are $800, and this is an actual example from Zillow. I actually pulled up a house in Rochester, New York, and these are the numbers that I'm using right now. These are actual numbers. So let's just say that they're renting each property at $800 a month, okay? And then you look at the expenses, which is mortgage insurance, property taxes at a 3% interest rate. That's what the rates are currently today. When you look at the interest rates for a 30-year fixed mortgage, you're gonna end up with expenses of $337. Okay, so you do rent minus the expenses, you're going to get a profit or cash flow of $463 a month. Now you times $463 a month times 5, because you have 5 properties here. So you do 463 times 5 equals $2,315 per month. So you do $2,315 per month times 12, because there's 12 months in a year, you end up with $27,780 a year for your 5 properties. All right. So this is how you can leverage $100,000 or leverage real estate to your benefit, because now you have 5 properties. Not only do you have 5 properties, but people are renting it from you, and you have cash flow, which is $463 a month out of 5 properties. So then in total of all 5, you have $2,315 a month coming in, and that's all positive cash flow. That's after paying your expenses and paying the mortgage. All that being said, which one should you invest in? That's up to you. Now, me personally, I have both. I have real estate properties, and I also invest in REITs. And it depends on, what you want to do and diversification. If you want to be lazy on this front, you got some extra money that you don't want to go through the whole process of buying a property, you could go with REITs. If you want to have a tangible asset and you want to see it grow over time, and you want cash flow and you want to manage a property, you could go with real estate. It's not bad to have both. So, if you can afford it, if it's in your future, if you want to start off small, go with REITs. If you want to, start off with cash flow, go with real estate. But it's not bad to own both. That's what I would say. Thank you so much for watching. If you like this video, please show your support by liking, subscribing, and sharing this with friends, family, and loved ones. Also, if you want to learn more and see more from my page, please check out more videos here.